This is the charts on Chewy. This is the daily chart, weekly chart, monthly chart. And it appears that I marked it up in the past. So we're going to kind of reconstruct the scene of the crime. Probably see this support, resistance, support a bit better on the weekly chart. This is just showing price being range bound for the better part of a year. So let's go down. This is the weekly chart. This is that support, resistance, support. And you had a couple of false breakouts to the upside. Now here, the red denotes weekly buyers, but I didn't mark it in as I probably felt that it wasn't a strong level of interest. But it did mark off this little area here, which you can probably see on the daily chart. So let's go to the daily chart. Yeah, so you had a gap, right? Not on earnings, but you had some type of gap. So this was the level of strong imbalance between buyers and sellers. Price attempted to come back once, but a second time, and nearly hit the top of that level. Missed it by 22 cents. But before we continue with the analysis, let's look at this article. It is coming from Investor Place. Why is Chewy down 12%? Well, they announced their earnings this past week, in which the stock fell. They posted positive results for their second quarter, but it's all about the forward-looking guidance. The company also was downgraded. So to get into the details, let's look at this video before we continue with the analysis.
It's time for Under 30. Let's bring in George Tillett, senior markets correspondent for the Schwab Network, talk some Chewy. The company, it's not on its best run as of late, George. Stock right now down quite significantly here intraday. As I key it in, 11.5% to the downside. Not lifetime lows, but dangerously close to them, George.
Yeah, I think you have to look at the price action in Chewy. I mean, it is a trusted online, pet merchant, but also, if you will, from an e-commerce standpoint, they offer services, things like pet insurance services. They're actually moving into deployments of brokering other services like veterinary services with local veterinarians, and also grooming services. These are other things that Chewy is actually partnering up with local places to do. But the challenge for the business itself, I think, is really broad-based competition. I think if you look at Chewy, it has got a brand, it has recognition, it has over 20 million active users. Its revenues per user is actually growing. And if you look at the auto ship, this is the effectively the percent of folks who are actually now doing an auto renewal, if you will, on a monthly basis or on a quarterly basis. That's about 75% of sales, which again gives you an idea of recurring revenue. But I think the challenge for Chewy is really valuation still, unfortunately. So if you look at the numbers overall, they actually beat the estimates quite a bit, coming in at 15 cents versus the 9-cent estimate. Now that was an increase relative to last year. But sales also grew and beat the estimates by about 14.4%. And as I mentioned, the renewal customer growth was actually higher by 18%. But the challenge, again, like I said, from a valuation standpoint, is if you look at last quarter, which I did, the earnings per share estimates are around 48 cents for the fiscal 4 quarters on a forward basis. Now, after this most recent quarter, the numbers have been adjusted to 53 cents. But the last quarter, the stock was trading around a 62 times forward multiple. It's down now with price, which is down about 35% over last year, to a 51 times multiple. And so when you see decelerating sales growth, which again, on a forward basis, compared to the quarter at 14.3%, they're expecting about 13% sales growth on a forward basis. And I think that valuation, despite EBITDA margins coming in higher than estimates, as well as gross margins for the quarter, are just insufficient to match the high multiple. And therefore, despite the highly recognized name, the brand that is trusted by pet owners, just because you see it, or if in fact you use it, doesn't necessarily mean that the stock is worth what effectively the market says it's worth right now.
George, Alex here mentioned the declines we've seen, disappointing price activity so far this year. The stock's been down below the 50-day moving average since the middle of July. It's been below the 200-day moving average since around that time as well. I look at a story like this and I'm wondering again, what does it take for them to turn it around ultimately? What does it take for them to kind of regain that composure and get back into a better position here?
So a couple things. I thought about this. If you just consider their business, they can improve the scalability. In other words, increase sales per customer by adding additional services. I think that's one way Chewy can effectively grow its way back into better profitability profile. Let's put it that way. I think at the end of the day, also, you have to consider if that's feasible, whether or not, again, the valuation multiple is justified. And I think if you just look at the moving averages you mentioned, below the 50, below the 200, those are basically downtrending moving averages. And so I think right now, based on the trend, it's very powerful. If the trend is down, don't fight it. And I think at the end of the day, Chewy effectively, is facing a lot of competition. They need some scalability in operations. If they partner up, let's say, with companies like Amazon, or Walmart, for instance, that might actually be a good thing to, again, pair up the middle ground, if you will, the warehousing, merchandising, and so forth, with a very scalable business like Amazon or Walmart.
George, what my real big takeaway from this is that context matters as well. We look at this on the surface, you see a stock that's down nearly 12%. It's a brutal reaction, but it's down $3.24. The market maker move yesterday was almost $4. So we had looked at on Monday selling an iron condor, which is not a strategy you would think that would have done well in a stock that's down 11, almost 12%. But I just checked, this thing would have been up 50 cents, even though the strike's been tested, because implied volatility is so juiced into some of these earnings. Expectations oftentimes really settle the score, and this is one that was expected to move a lot. So when you put that context in, I don't think the move, while it's disappointing, is as bad as it looks on the surface. But George, we'll leave it there. Appreciate it as always.
All right, so here's the bad news. CNN recently reported that consumer sentiment soured at the end of summer on inflation concerns. In addition, people rightly have some anxieties about keeping their job. Unfortunately, layoffs have started to pick up again. The positive side, well, households with annual incomes of over $100,000 are most likely to own pets. Within this segment, 63% own dogs and 40% own cats. It's possible that pet owners generally hold more mission-critical and higher-paying occupations. All right, back to the chart. So price has now breached not only this level of interest to go long, but also this zone. And you had a nice rally into daily sellers. And that was an A setup because price breached the lower end of the zone, pulled back, had your moving averages pointing down into supply, and then collapsed, right? Into sellers and then collapse. Question is, what's going to be the low? I'm just going to put $20, right? I like round psychological numbers. But we'll see what happens. This level here, this zone here was support, is now resistance. So it's going to have a tough time moving out and above this level. So I think there potentially is still more downside risk. However, Again, looking at the weekly chart, you can see buyers did step in. So let's move this to $22 as buyers stepped in again. But based on forward guidance, we could see again more downside risk. Thanks for watching. Subscribe. Please like the video.